Hey there, Lincoln here from bullacademy.org. Today I want to talk to you about Lucid Motors and CCIV's potential merger that continues to get closer and closer to a final deal and a DA, a definitive agreement. So as you know, CCIV is a SPAC, a special purpose acquisition company by Michael Klein, and it's the second largest SPAC with $2 billion in its trust fund, just behind Bill Ackman's PSTH. So this SPAC has lots of money to go out there and find a great target to take public, and that's why when news came out on January 11th that they were potentially targeting Lucid Motors, an EV company that is vertically integrated, just like Tesla, and could compete with Tesla here in the USA and be the NIO of America, people got very excited. And it's only been rumors since then, but these rumors continue to become more and more convincing. So since the start, there was very good reason to believe that Lucid Motors and CCIV would be in talks to go public via a SPAC merger. There are many connections between the two companies, and those connections continue to become more apparent, and news continues to be leaked from inside of the company CCIV Churchill Capital Corp about the proceedings of the negotiations. So as you may know if you watched my previous video on Lucid Motors, I'm invested in this. And I don't usually do this because there is lots of risk here. But the reason I'm invested is because the risk is asymmetric. This potential deal between the two companies has great upside potential and very limited downside potential. And that's a unique feature of SPACs. And this deal, especially with the rumors, if you were to buy in at $12 per share when the rumors first came out, you will be doing pretty well right now, and your downside risk is very limited. So that's why I'm invested, and today I want to walk through more news from the last 2 weeks that have been coming out and causing the stock price to rise parabolically. So we're going to walk through the key events that happened over the last 2 weeks and discuss what all of that means for this deal, this potential deal, and whether or not it's good or bad and why people are so excited. So as I noted previously, this SPAC started out trading around $10 per share. And on January 11th, the first news report from Bloomberg came out saying that these companies were in talks, Lucid Motors and CCIV. And on the 11th, the stock jumped by 36% to $13 per share. And that's because people were really trusting what Bloomberg was saying. And then people started to connect the dots. And they saw that there were many connections between the two companies. And then, of course, people saw that SPAC Track, a Twitter profile that covers SPACs, said that about 87% of in talks turned into definitive agreements for SPACs and their target companies. So there were many reasons to believe in this deal, in this rumor. So people bought it, and the stock continued to rise on continued excitement about this deal coming through. And of course, investors went out, tried to do their research on do the DD, and put two and two together. And as they did that, the stock continued to rise all the way to $32 on February 2nd. And that was up 231% of the time. But then a few days later, 9 days later, on the 11th of February, the stock was up to $31.50. But then came even bigger news. On Tuesday, February 11th, about 9 days ago, more news came out from Bloomberg's terminal stating that Venrock Associates, an early investor in Lucid Motors, and other early investors in Lucid Motors, proposed a deal to sell their stakes in Lucid Motors to Churchill Capital Corp for CCIV. And of course, that carried the stock up even further. So if we look at the stock right now, on February 11th, it was at $31.50. And the very next day, it was up to $39.98. And then it settled around $37, $38 per share. But then came this week, Tuesday the 16th of February. More news came out on Bloomberg's terminal, and we got screenshots of it on Twitter, stating that Lucid Motors nears a deal to merge with Churchill Capital Corp. Lucid Motors is getting close to a deal to go public at a valuation of approximately $12 billion in a merger with Churchill Capital Corp. Reuters reports, citing people familiar with the matter. And it goes on with 4 bullets, saying that Churchill Capital Corp initiated talks with investors to raise over $1 billion by selling shares in a PIPE transaction for the deal with Lucid. So this just means that Churchill Capital and Lucid Motors have come to an agreement on the terms of a potential deal, and Churchill Capital needs more money to fulfill their end of the deal. So they're going out to raise a PIPE deal, a private investment in public equities, which we've covered many times in this channel and broken down, to get enough money, about $1 billion or $1.5 billion more, to have enough money to acquire the company at a valuation of $12 billion. So this article goes on to say that Lucid and Michael Klein agreed on the key terms of the deal. What can you say to this? This just shows that they have been in talks all this time. Of course, this just says people familiar with the matter. There's no names to it yet because they're not allowed to say, because there is no public information that has been released by the company officially. So all they can say is anonymous sources. But this is Reuters, this is Bloomberg. These are reliable sources saying that they have obtained reliable information from people familiar with the matter, saying that Lucid Motors and CCIV have reached an agreement on the terms of the deal. So they go on to say the deal could be announced as early as this month, February 2021, which has the least amount of days. Only 8 more days left in the month. That's 1 week. So it seems that we can expect a deal to be announced this week coming up. So this is great. And of course, the market responded very happily. But before I show you how they responded, let me just finish what this article says. It says that Churchill Capital Corp declined to comment. Lucid did not immediately respond to our request for comment. Reuters. And of course, on that news, on the 16th, the stock just shot up from $37.90 at 11 a.m. And that was up 100% at that time for the month, to by 1 p.m. to $48.82. That's more than $10 per share. And by 2 p.m. we officially crossed $50 per share for the first time in CCIV. By the next morning we were at $55 per share, up 200% for the month. And by the end of the next day, following that news, we were up to $56.23 on CCIV, which was up 479%. That's pretty good for a rumor, right? And it kept going. On February 18th, 2 days after that news of the pipe deal being raised and the terms of the deals being agreed to, we were up to $60 per share at 11 a.m. on the 18th. And on that day, we reached $64.86, a 52-week high. So all-time high. People are very excited for this deal, and there's very good reason to be excited. Lucid Motors is a very exciting company. They have the potential to compete with Tesla directly here in the USA and abroad. And this investment is asymmetric. If the deal doesn't happen, then people can count on having their $10 per share as a backstop because it's a SPAC. So if you bought in at the low of $10 per share or $12 per share, you don't have much to lose. So that left us at Thursday the 18th. But then, of course, February 19th, Friday came, and the stock went down from there. At 10 a.m. on Friday, it was at $59 per share. Then at 2 p.m., it was at $57 per share. And at 3 p.m., there was apparently some rumors going around about some GSAH SPAC out there, suggesting that they were in talks with Lucid Motors. At least their investors were talking about that. The people on Twitter were talking about how they might steal Lucid from CCIV, so people got afraid. And of course, there is no reliable sources for this rumor, so I don't know why people were believing it, but people have very weak hands on Twitter and they get scared very easily. So the stock went down a little bit from its high of $64 per share, and now it sits around $54 per share. That is still up 462%. That's pretty good for a rumor. Again, this is just a rumor. This could fall apart at any time. So if you want to get in, or if you haven't gotten in yet, you should be very careful about that, because if you get in at the top, as we discussed with GameStop and Kodak and all the other hypes, you will be burnt if this reverts and starts going down, because you got in at the top and stocks do go down. So if it does go down and it goes down sharply, you will lose a lot of money if you got in at the top. And as I said in GameStop, please don't fall too far. If you're going to do this, know your risk. Know that you are risking losing $40 per share if this reverts down to around $14 per share. So I'm in this deal. When I first saw this, I knew the asymmetry was real. And I said over and over again on this channel that asymmetric risk is the holy grail of investing. So when I saw this and it fit my investment criteria, the company Lucid Motors fit my investment criteria, because I knew enough about them just from a quick Google search and watching their videos and looking at their history and their founder and the leadership. I said, hey, this rumor seems pretty credible given that CCIV is the second largest SPAC out there. And reputation matters a lot in investing. They wouldn't leak this information. And again, this was a leak. We didn't just get this information by accident. Someone in the company between Lucid Motors and CCIV leaked this information. There's no other way that it would have happened. They leaked the information because they felt they were close to a deal and they wanted to see how excited the market would be. And obviously the market has been over 500% excited. This stock is up way more than any other SPAC that I've ever seen. Remember, investing comes down to two things. What did you know, and when did you know it? The people who saw this rumor on the 11th of January knew of the rumor, and they knew of the company, and they knew of the SPAC, and they said, this is a good chance of success. And so they bought it. What did you know, and when did you know it? So if you came in on February 16th, just this week, you would have known of this deal, this potential deal, and you would have known it this week. But unfortunately, because you knew it too late, at least at this point, it seems to be too late, just given how far it's risen and the valuation of the company. It might be overvalued, it might not be overvalued. I don't know, that's for you to decide. So you might have come in a little late. Or you might think, hey, I'm still early, and I believe this will go to 100 once the DA comes out. So in that case, if you think that it's going to 100 and you think it can double, then maybe you're not too late. And if you think it can go to 200, then hey, you are definitely not too late. So it's up to you to decide what you believe the future will be given the current state of this deal, this rumor, and the potential of the company, and decide if this is an asymmetric risk for you. But I don't think so, because if this deal falls apart and there is no DA, then it's going back to around $12 or $20 per share. And I can't afford to lose that much money. I just can't. So because I got in at around $12 per share, I could afford to lose a few $1,000s per share if this deal doesn't come through. That's my asymmetric risk, right? You have to decide what your asymmetric risk is. I can afford to lose a few $1,000s, maybe a couple tens of thousands of dollars, but definitely not more than that. So that's my risk profile that I can accept. And I'm very aggressive. I'm a very aggressive investor. So usually I want to get in very early on these kind of things as soon as I know and have conviction in the deal or the proposed deal. So that's what happened over the last couple of weeks. And that's how we doubled CCIV from $32 per share on the 2nd of February to $64 per share on the 18th. So within 16 days, this stock doubled. And between the 10th of January and the 18th, it's more than 6.4x its value. And we have more to talk about on what that means for these pipe deals that are being put together right now, and how we're all being left out of that great free money that is being thrown at these institutional investors if the share price of CCIV stays around where it is right now and the pipe investors get in at $10 per share. So we have to talk about that, but for now, let's end this video because it's going long enough. So if you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on CCIV and all the news that came out over the last 2 weeks. And if you're investing, let me know how much. Let me know if you're in, and let me know if you're not. And if you were in and exited, share your gains below. I would love to see it. And of course, if you want to help the channel grow and reach more investors and get more access to me and get direct answers to your investment questions, then join us over at patreon.bullacademy.org. That's where we discuss the stocks and SPACs that we're all investing in and share resources and news and rumors to help one another grow our wealth together. And we get in early on deals like CCIV and SBE and so many others so that we can maximize our returns together. And that's where I share my early research into new companies and into new concepts and ideas that I'm thinking about with our patrons. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, I hope to see you over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.